Former FBI Director Comey is expected to testify to Congress about his recent investigations between the Trump campaign and Russia and events that led to his dismissal as head of the FBI. And because of this, this could have a significant impact on trading in U.S. markets in the coming days. The reason is because when he was first fired a few weeks ago, the speculation of bringing in independent prosecutors and things like that had raised the specter that some politicians may try to impeach President Trump. Markets, however, should be careful what they wish for with relation to that, because previous attempts to impeach presidents have been very, very bearish for stock markets. And I'll use two examples, one of which was in 1974 when President Nixon was driven out of office under the threat of impeachment. Between May and October, the stock market fell 32% over the course of about 4.5 months. In 1998, when President Bill Clinton was impeached by the House of Representatives but managed to stay in power by the Senate, let him stick around, we saw a 19% decline in the stock market in about 6 weeks in the summer of 1998. On top of that, whether or not this testimony leads to impeachment proceedings against President Trump or not, it also sets a very hostile, very contentious tone in Washington, with a number of things coming up. We've got a budget battle coming in September. We've got the U.S. is going to hit the debt ceiling again, and because of that, there's a potential for a government shutdown. There's already been, my feeling is that the Fed has been calling for 3 interest rate hikes this year, feeling that they won't be able to raise rates in September because of the coming battles. And that also keeps the pressure on the Fed to raise interest rates in June. So not only is this likely to could this have an impact on stock markets, this could also have a significant impact on trading in the U.S. dollar. If this ramps up potential political tensions in the United States, we could see the U.S. dollar come under pressure here. And I'm looking at the dollar index. It's been trending lower since March as it is. Now, if we saw a ramp up in political tensions, it may be too little too late to stop the Fed from raising rates in June, but it could knock the Fed on hold for the rest of the year. It also could have an impact on the confidence in the United States and on its economy and on its outlook. The big Trump trade post-election was driven on the idea that he could bring through healthcare reform, tax reform, infrastructure spending. But if they're bickering over who said what to who with regards to Russia and other things, that's distracting not only the president but also from Congress away from the business agenda over to other political and foreign affairs agendas take over, and that could delay some of the other initiatives, and that then could undermine some of the expectations that have been built into U.S. stocks. So potentially this could be bearish for the dollar. It could be bearish for the U.S. indices, depending on what comes out of this. If somehow political tension manages to ease, that could be seen as a positive for the dollar, positive for U.S. stocks. So let's just take a look here at some levels. U.S. dollar has been consolidating here. It's found some support about 96.50, initial resistance about 97.65. However, if 96.50 breaks, you could see $95.50, $95. This is in a general downtrend of sell-off, consolidated at lower levels, indicating general distribution. If we look at U.S. stocks, we've had a huge run here, but we're still seeing that perhaps we might be rolling over a bit. We've seen here that we have achieved a new high, all-time high, trading above 21,130, but didn't get very far. Ran into resistance near 21,230, and the Dow has been struggling to make further headway. The RSI is showing the U.S. market essentially leveling off. The other thing with political risk and tension is that we could see that impact trading in defensive havens. Not only on Thursday do we have the Director Comey's testimony, we also have the UK election, so we could see quite a bit of action and reassessments of political risks over the next 48 hours. And we've seen this, and particularly in gold, we've seen as the political risks have become more apparent, and some traders have been jolted out of the complacency we've seen with a VIX, a 10 VIX and things like that. But look at this, gold has been rallying over the last month or so from down near 1220 up towards the 1290 to 1300 range, testing resistance there. If we see a ramp up in political risk, that could blast gold through 1300, next resistance near 1340. If political risk starts to ease, gold could come off in a trading correction. Possible support here around, say, the 50-day average is near 1260. Similarly, dollar yen. is also an important one. We've seen the dollar has been falling relative to the yen in recent weeks. So if we see political tensions ramp up, we've already seen the yen break 110. This could retest this low here in and around closer to 108. On the other hand, if political tensions ease over the next couple of days, then we could see this bounce back up, perhaps above 110 toward 160. 50-day moving average is around 111.15. So the coming day, 24 to 48 hours, right through the end of the week, could have features a number of developments in the U.S. and the U.K. that could have a big impact on Fed speculation, on political risk assessment, on earnings expectations, and because of that, it could generate a number of significant opportunities for trading.